Let's go right now to the economist Natasha Sarin, who served as counselor to former Treasury Secretary Janet Yellen. She's also a professor at the Yale Law School. Thanks so much for joining us. What do you think is driving today's sell-off? Is it those China tariffs, the retaliatory tariffs imposed by China?
I think that's a big part of what we're seeing. And frankly, I think what you're observing in the market is the aftermath of Trump launching this sort of one-sided, igniting a global trade war that is going to have the effect of the countries who are being tariffed, who feel like it's unfair the way the United States is targeting them, are obviously going to retaliate in response and tariff our imports to them. And you're going to kind of see this cyclical reaction, and you're seeing the market realize in real time what Trump had been saying all along throughout the campaign, which is that he was committed to using tariffs as a tool to, he thinks, restructure the global economy. And now we're all taking him seriously because he's done exactly that.
This morning, as you know, we got a stronger than expected jobs report. 228,000 jobs added in March, while the unemployment rate ticked up a little bit to 4.2%. Is Wall Street taking that into account right now? Because normally a good jobs report would boost stock value.
Totally. And what you're seeing kind of is that that is a much stronger than expected jobs report that we got today. And what it's telling us is that the labor market is doing very well. And frankly, if what the Trump administration had done is just like sit back and ride a very strong economy that they inherited, we would be in incredibly good shape. But even that positive data that normally would be a very good sort of market reaction to kind of better than expected performance is not actually having that reaction in the market today. And the reason is that the market understands that this data is a little bit the calm before the storm. It's telling us about ex ante what the world looked like before we ignited this trade war that's going to drive prices up for consumers by thousands of dollars a year, that's going to add to inflation, that's going to shrink the economy, that's going to mean less investment in the United States, and is going to mean job losses in the future. And as you kind of weigh what ex ante world is telling us relative to ex post world and the future and what's coming, people are quite concerned, and the market is quite concerned as well about the likelihood of a downturn that's ahead of us.
Quick question before I let you go, Natasha. Do you think that people who are watching right now all over the country who have 401ks and other long-term investments and a lot of that in stocks should think about selling the stocks and investing in something safer, albeit the interest rate would be more modest, potentially treasury bills, something like that, just to be on the safe side?
So as a finance professor, I should be very sure not to give people financial advice myself. But what I will say is that it is generally a mistake, and empirical evidence shows that it is a mistake to overreact or panic sell in moments like the one that is before us. But I totally understand the concern and the impulse, given that if the market deteriorates further or kind of maintains where it's at this week, we are having the worst week for the stock market that we've seen in recent history, worse than any week in the last administration. So you were asking, Wolf, yesterday, the last time we spoke, where are people going to start to see the impact of these tariffs and the impact of these price hikes? Well, what's true is they're starting to see those price impacts already, but they are already feeling the impact of this trade war because they're feeling it in their 401ks, they're feeling it in their retirement accounts.
They certainly are. All right, Natasha Sarin, thanks so much for joining us. And we'll